Dear members, good morning. I, Kalpesh Dave, Company Secretary of the company, welcome all the members to the 32nd Annual General Meeting of Gujarat Ambuja Export Limited, which is being held through video conferencing. I hope all of you are safe and in good health and stay that way. This meeting is being held through video conferencing in compliance with the applicable provisions of the Companies Act 2013 and various circular issued by the Ministry of Corporate Affairs and Securities and Exchange Board of India. We have with us Mr. Manish Gupta, Chairman and Managing Director of the company, Mr. Sandeep Agarwal, Full-time Director of the company, Mr. Vishwavir Saran Das, Independent Director of the company, who is Chairman of Stakeholder Relationship Committee, Ms. Maitri Mehta, Independent Director of the company, and Mr. Giridhar Nagaraj, Chief Financial Officer of the company. Mr. Sandeep Singhi, Independent Director of the company, who is Chairman of the Audit Committee and Nomination and Remuneration Committee, have joined this meeting through video conferencing. Mr. Jinal Patel, partner of the Kantilal Patel and Company, who are the statutory auditors of the company, and Mr. Neeraj Trivedi, who is secretarial auditor of the company, and scrutinizer for e-voting process for this AGM have joined through video conferencing from their respective locations. Now I will brief the member on some general instruction for joining and voting at this meeting. All the members who have joined this meeting are by default placed on mute to avoid any disturbance from the background noise and to ensure smooth and seamless conduct of this meeting. Once the question answer session begins, the chairman sir will first answer those questions which were received in advance. Thereafter, moderator will unmute the member who have registered themselves as a speaker one by one. Each speaker member will get a chance to ask only 2 questions. Members who have not voted through remote e-voting and remote e-voting can cast their votes through e-voting facility during the AGM and 30 minutes after the conclusion of proceeding of this meeting. The document referred to in the AGM notice, explanatory statements, register of the directors and KMP, and register of the contract or arrangement has been made available for inspection by members. As requisite quorum being present, with the permission of the chairman, I declare this meeting to be in order. Now I request to play a brief presentation of the company. Thank you for playing the brief presentation of the company. I would now request the chairman to take the proceeding forward.
Thank you, Kalpesh. Dear members, a very good morning. At the outset, on behalf of the Board of Directors, the management, the employees of the company, I welcome you all to this 32nd annual general meeting of Gujarat Ambuja Exports Limited. I want to express my sincere gratitude to all of you for becoming a part of this meeting and hope that you and your family are safe and healthy. As the world economy continued recovery from COVID-19 pandemic, it was further exposed to large-scale disruption caused by Russia and Ukraine. Even though the logistic challenges coupled with soaring inflation and cost impacted several industries, we were committed to growing and giving back to our stakeholders to the best of our ability. In the maize processing division, we advanced and concerted our dream of being a pan India company by turning our Malda project into a reality. The latest state of the art corn wet milling facility commenced its commercial production of starch in March 2023 and shall commence production of starch derivatives during the current financial year. The plant has achieved 50% capacity utilization, which is already a landmark figure for a greenfield project to achieve this number in the first 4 months of operation. We also started the construction of a new 1000 TPD greenfield corn wet milling facility at our Sitarganj unit, making it the largest corn wet milling in the country with a total capacity of 1750 TPD. This facility will be commissioned in June 2024. We commercialized our sorbitol projects at Hubli and Sitarganj, with the facility at Sitarganj commencing commercial production in March 23. The facility at Hubli will start commercial production in Q3 of 23-24. This will make GIL the largest sorbitol manufacturer in Asia outside China with a total capacity of 500 TPD. We are very excited to announce the expansion plans of our mother plant Himmatnagar, where we have decided to set up a greenfield plant for 900 TPD corn wet milling facility along with starch derivatives. This will make Himmatnagar the second largest plant in India with a total grind capacity of 1400 TPD. This facility will see the light of the day in the second quarter of 25-26. We will be the largest maize processing company in Asia after China. Lastly, we have completed the revamping of all 3 captive power plants to support our expansion and diversification at Hubli, Himmatnagar and Sitarganj. The relentless commitment and dedication of every member of the company helped the business overcome many challenges in the past year. As a result, we have been able to bring down the curtains of the financial year 2022-23 with a robust set of numbers. The operational revenue of FY 22-23 stood at rupees 4,909 crores, EBITDA at 549 crores, net profit after tax at 331 crores, and export sales of 1,516 crores, along with being a zero debt company. The sustainability of the company and its operation is our most priority, and the ESG concept and the framework outlined are stepping stones for the future. We will diversify and indulge in practices that would make our units the most sustainable ingredient provider in the country. We are one of the first companies to incorporate the ESG, GHG framework into our business model, and have made sure the sustainability is at the forefront of all our operations. We aim to be a complete ingredient provider for the industries we cater to. We believe that our products offering can be an end-to-end solution for food, pharma, and feed industry. With this thought in mind, we are positioned for today and prepared for tomorrow. The future of the company looks very exciting and intriguing. With an experience of over 32 years in the food processing industry, we are diversifying into the fermentation industry with specialized fermented products as import substitution and promoting the Make in India initiative by Government of India. The company is going to invest about 1,000 crores in this segment over the next 5 years. Our way forward is committed to increasing our shareholder value along with providing stable and sustainable growth for all our stakeholders. The company will achieve its set targets in due course and make sure it always works in the best interest of society and the nation. In the end, I would like to take this opportunity to express my sincere gratitude all our employees, customers, vendors, stakeholders, shareholders who have shown a strong belief in the company. We work relentlessly to give back to them and make sure GAEL is reaching new milestones year on year. Thank you and have a wonderful day. I would now request Mr. Giridhar, CFO, to give insight on the financial numbers and overview for the financial year 22-23. Thank you.
Good morning, members. It with great pleasure I take this opportunity to have a brief presentation about our operations and also the financial highlights for your reference. As you all aware, our main raw material requirements are coming from agro-based commodities, for which we have to nurture our nature to ensure sustainable supplies of quality agro ingredients. These agro ingredients are processed in best-in-class technology, sustainably strengthening the entire supply chain process. As you are aware, we are primarily into agro processing, catering both domestic and overseas market sizable share, and our user industries are predominantly foods, pharmaceuticals, animal feeds, and nutrition industries. Our company's vision of progress to be one-stop, one-tap, single-window solution center for agro ingredients, to be a global leader in the field. A mission of nurture is to identify and adopt newer and optimal technologies, voluntarily conform to international quality standards, nurture and strengthen the entire ingredient supply chain, to do so in a very secure, responsible manner so that it is sustainable, foster superior quality as a state of mind. Our processes across the three segments comprises of corn processing, solvent extraction, edible oil refining, hydrogenated vegetable oils, atta chakki cattle feed, renewable energy for our captive use, and cotton yarn. Our core segment, corn processing, where we undertake activity of manufacturing starch and value-added derivatives. We have a capacity of 13,20,000 tons per annum of corn grinding. We have our presence in 5 states: Himmatnagar in Gujarat, Sitarganj in Uttaranchal, Shigaon in Karnataka, Chalisgaon in Maharashtra, Malda in West Bengal. And as Chairman Sir mentioned, we have our upcoming capacity and expansions at Sitarganj and Himmatnagar. Our main products range from starch and various value-added derivatives like liquid glucose, sorbitol, dextrose monohydrate, dextrose anhydrous, maltodextrin powder, and gluten meal. Our other core segment, agro processing, which comprises of solvent extraction, where we undertake activity of manufacturing soya derivatives, meals, which also are known as de-oiled cakes for animal feed, and edible oils from various oil seeds apart from soya. We have our capacity of 14,85,000 tons per annum crushing capacity, seed crushing capacity. We have our presence in 3 states, Kadi in Gujarat, Pithampur and Mysore in Madhya Pradesh, Akola in Maharashtra. Our main product range in solvent extraction, apart from various de-oiled cakes and meals, we also have soya lecithin, defatted soya flour, and various soya derivatives to cater to the consumer market. Next activity in agro-processing is edible oil refining, where we have a capacity of 396,000 tons per annum refining capacity. Again, we have our presence in 3 states, Kadi in Gujarat, Pithampur, Mysore in Madhya Pradesh, and Akola in Maharashtra. We have our brands Ambuja Gold, Health, Magic, Sampurna, and Happy. And we have all types of refined edible oils ranging from soya bean, cottonseed, rapeseed, sunflower, corn, groundnut, refined palm, and blended vegetable oil. We also have hydrogenated vegetable oil, which is popularly known as Vanaspati ghee. We have 66,000 tons per annum combined capacity. We have our presence in Gujarat, Kadi, where we have our manufacturing location. We have Vanaspati ghee brands as Ambuja Moon, Triveni, Happy, and Ojas. Spinning, we have cotton yarn spinning capacities of 65,500 spindles with 42 tons per day production capacity located at Himmatnagar, Gujarat. We have wheat processing plant at Kadi and Pithampur with a capacity of 123,750 tons per annum, with again brand Ambuja Gold, Prime, Chakki Fresh, where we have whole wheat flour and wheat flour, which is atta and maida. Cattle feed, we have capacity of 16,500 tons per annum, located at Kadi, Gujarat. As our initiative to have a greener environment and also to encourage renewable energy generation for our captive power consumption, we also have wind energy and solar energy. We also have biogas engines, biomass-based boilers, and also environmental friendly fuel-based boilers, where we ensure that we contribute significantly to the greener environment. We have 10 megawatt capacity of renewable energy of wind and solar across all the locations. To just take you through our 3 decades journey, various milestones, right from 1986 onwards, where we started our operations establishing a flour mill at Kadi. 91 to 93, we incorporated Gujarat Ambuja Exports Limited. We had 1 year operation as the first year of export house operation and also solvent extraction plant at Kadi. During 94 to 96, we set up our cotton spinning unit at Himmatnagar with 42,000 spindle capacity and also installed 100 TPD maize crushing plant at Himmatnagar in the same campus. We also installed another 2 solvent extraction plants in Kadi and Pithampur, and also Vanaspati ghee plant at Kadi. During 97-98, we consolidated our corporate structure, Gujarat Ambuja becoming a flagship company where all the operations were consolidated in under one roof. During 99-2004, we established 2 edible oil refineries and the largest solvent extraction plant in Akola, and wheat processing mill in Pithampur, and 2 megawatt lignite-based cogeneration plant at our biochem plant at Himmatnagar. During 2005-06, sorbitol, value-added maize derivative, we started production, and we also increased our capacity of cotton yarn from 42,000 spindles to 73,000 spindles, and also we enhanced the capacity to 300 tons per day at Himmatnagar. We also added our captive renewable energy generation plants at Himmatnagar. During 2007-10, we commenced our maize processing plant at Uttaranchal, 300 TPD we started, and also solvent extraction plant with 1000 TPD capacity and refinery 200 TPD capacity at Mysore, Madhya Pradesh. 2010-11, Again, we installed 750 tons per day state-of-art crushing plant in Haveri, Karnataka, and also 11 megawatt lignite and coal-based power plant in Himatnagar to take care of our captive power requirements. During 2011-18, we established 1000 TPD, again state-of-art maize crushing plant at Chalisgaon, Maharashtra. We established 1 megawatt solar plant, and we increased the maize processing capacity at Himatnagar to 500 TPD, and also Sitarganj capacity we enhanced to 750 TPD, and established a surplus plant at Sitarganj and Chalisgaon 120 TPD capacity. 2018 to 21, we installed HTPE back plant to take care of our captive requirements, and we installed again 1 megawatt solar plant in Akola, 1200 TPD, again maize crushing plant. We conceptualized to set up a plant in Malda, West Bengal, and 100 TPD sorbitol plant at Uttaranchal and Hubli. 2022-23, our proposal to set up, expand our capacity of 1000 TPD in Sitarganj, Uttaranchal, and we commenced our 1200 TPD maize plant in Malda, and again 100 TPD sorbitol plant in Uttaranchal, and we also signed an MOU with Government of Gujarat to establish 900 TPD greenfield project in Himatnagar. Just to give you brief highlights about our financial for last 5 years. 18-19, our revenue 4,000 crores. It went up to 4,900 crores in 22-23. EBITDA from 384 crores to 549 crores, and PAT from 198 crores to 330 crores. Our gross margins during 18-19, it was 24.5%, which went up to 27.7%, the best year being 21-22, where our gross margins went up to 31%. Same trend, EBITDA also you will observe, during 18-19, 9.5%, and it has gone up to 11% in 22-23, where the best year being 21-22, where we reached 15.8% EBITDA margin. Segment-wise revenue, significantly maize growing from 1,870 crores to 3,200 crores, and agro 1,900 crores, moderated at 1,600 crores during 22-23. Last 10 years revenue trend, 13-14, our revenue stood at 3,100 crores, and it has gone up to 4,900 crores in 22-23, which is definitely growth of almost around 55%. Market price, our share price stood at 331 during April 22, and March 23, it stood at 232. We have our footprints, almost 100 countries worldwide as far as our export, and significantly our export also has gone up over the past 5 years, both in predominantly in maize segment. We have our world quality certificates, which gives a testimony for our quality and also make our presence significantly in our export market. Thank you once again for your time and your trust in our company. And our slogan, corporate slogan, I would like to reiterate: down to earth but reaching for the skies. Thank you. I now request Chairman Sir to take care of the rest of the proceedings.
Thank you, Gidraji, for your valuable presentation. Dear members, since the notice and directors' reports are already circulated in advance, it is proposed to take them as read. Further, the statutory auditor's report and secretarial audit report does not contain any qualification, observation, or comment on financial statement for the financial year ended 31st March 2023. Hence, the same are not required to be read at this meeting. I would now request Mr. Kalpesh to take the proceedings forward.
Thank you, Chairman Sir. Now moving toward the question answers part. We have received some question in advance from few members, which will be answered by Chairman. The first question is update on 6,000 TPD capacity expansion by 25 and Malda plant operations.
Thank you. As already shown in our presentation, the Malda plant has already started operation in March. We have already achieved 50% capacity utilization and hope to achieve 75% capacity utilization by the year end. On the 6,000 ton capacity expansion by 2025, we are on schedule. We will commence the Sitarganj plant by June 24, and the Himmatnagar plant, we have just going to start construction, and we hope to achieve the commercial production anywhere between third quarter of 25. We are going to spend a total of 700 crores in these two projects to make the capacity of the maize division to 6,000 tons. Next question.
Our next question is related to raw material prices volatility and how the price fluctuation is mitigated by the company.
This question I've been asked many times. I have said this is the most critical part of our industry, to buy the raw material on time, to be connected to the farmers directly. We have a very large in-house storage facility of maize, close to 500,000 tons in our various plants. This enables us to store maize for all our plants for minimum 3 to 6 months of our grind capacities. Fortunately, India has two maize crops, Rabi crop and Kharif crop. So we try to keep our maize buying round the year, and especially during these two crops, we try to stock as much as possible to mitigate any unwanted circumstances which may arise due to maize price increase. Next question.
Next question is the opportunity for the maize starch and derivatives and new avenues and export realization.
As you have seen, we are exporting to more than 100 countries. So definitely there are opportunities still there to reach out to customers in North America and South America. We are now focusing on that part of the world for exports. During pandemic, we got very good leads to export to those countries, and we are fully focused and committed to increase our share in the international market. We will be expanding further from 100 countries. So derivatives exports, starch exports, both continue to be on a robust front. On the export realization, this number keeps on changing depending on the international corn price and international competitors' advantages and disadvantages. But as you have seen, we have enough approvals from all the multinationals which are required, which gives us consistency in exports. The approvals allow us to export to them on a continuous basis, leaving aside fluctuation in the prices, which do happen temporarily. So I can say we are at a much better position to export compared to our competitors in India and outside India. Next question.
Next question is the current maize derivative capacity of the company and the share of it in the revenue of the company.
So our total derivative capacity is around 33 to 35% in the total corn grind, and with the expansion from 4,000 to 6,000 tons, this number will remain somewhere close to 33 to 35% only. Yeah, next question.
Next question is related to update on the anticipated ethanol plant by the company.
Yes, we had planned ethanol projects. Currently, two ethanol projects are on hold, given the raw material situation and the uncertainty. One project is still we have not yet started. So at the moment, I can say ethanol uh, projects are on hold. We may take final decision on this in a few months. Next question.
Next question is update on the fermentation project of the company.
There is a lot of excitement, lot of questions on this subject. Last year, we had said we will be investing 1,000 crores in the fermentation business. Our subsidiary Maize Sitchem was established last year itself, and the first fermentation product will be out in 2025. The 1,000 crores which we have committed will be spent during the next 5 years from now, and the first product should be out by 2025. These fermentation products are going to be used in food, pharma, feed. So the line of business, the customers are going to be same. The raw material for the fermentation final product is going to be corn. So it's in line of our business and value addition which we have planned. Next question.
So next question is on expected capex outlay in the next 2-3 financial year.
We've already said we're going to spend 700 crores in the next 2 years for the expansion of our grind capacity at Himmatnagar and Sitarganj. We are going to spend 1,000 crores in the next 5 years in the fermentation business through our subsidiary Maize Sitchem. Next question.
Next question is possibilities of the buyback and declaration of more dividend.
At the moment, the company is in the growth. We don't expect to do any buyback or increase any dividends substantially. We will continue to invest in new projects for growth. Next question.
Next question is update on the agro division of the company.
Last year, the agro division did not do well. It's been a division which normally does well. We have seen a lot of volatility in the commodity market last year, but we are committed in the agro division. We hope this year we will be doing much better. Prices of all agro products are at record low in spite of the war in Ukraine and Russia from the peak. So we are fully committed to the agro division, and we hope to do well this financial year. Next question.
We have seen a jump in a power cost in financial year 23 as compared to the financial year 22. And what percentage of our power requirements come from the renewable sources?
So, as you all know, 2023 over 22, the coal prices, the fuel prices, the agro fuel prices had all increased substantially, which are now, that is the reason why there is a significant increase in the coal fuel consumption and fuel amounts which we have spent. This is now reduced substantially. It's not back to the 22 prices, but it is reduced 10 to 15% from the peak. So we hope to have a lower fuel consumption during this financial year. And renewable energy is about 25 to 30% from our various windmills, solar, biogas plants, bio engines, biodigesters. So about 25 to 30% comes from renewable energy. Next question.
What is our market share in sorbitol, liquid glucose, and dextrose?
So our market share in sorbitol is about 40%, glucose about 30%, and dextrose and dextrose anhydrous about 45%. Next question.
In chairman's speech, we talk about the new product introduction. While all this year, our focus was on putting capacities while our product mix remains same. What are the enablers that you believe give us the confidence to move towards new products?
Good question. We want to strengthen our backward integration, our grind capacities to be world standard capacities. That is the reason we have accelerated our capacity expansion. We have never done this in past. From 3,000 to 6,000 in practically 4 years of time. If you've seen the journey chart, we took almost 15 years to reach from 200 tons to 3,000 tons. But from 3,000 tons to 6,000 tons will be done in 4 years' time. We now think we need to add value by strengthening our backward integration. New products, for that we've already incorporated the subsidiary for the fermentation business. So we are very confident moving ahead. We will have more products, more value-added products, and full value chain from the corn derivatives. Next question.
10,000 crore sales target by financial year 22-25. Does this seems achievable by financial year 22-25, given financial year 22-23 figure witnessed the low growth?
Yeah, we still think next 2 years we will be close to that number of 10,000 crores. And with all the expansions in line and the growth from the maize division and the agro division, we believe that we will be very close to that number which we have projected, 10,000 crores. Next question, please.
Capacity breakup between corn wet milling and dry wet milling.
We do not do any dry milling of corn. We are fully 100% wet corn wet milling company. Dry milling is we don't do. Next question.
Next question is update on the operation of the spinning division of the company.
The spinning division has been lagging. We have converted from cotton yarn to polyester. The division is not doing so well. We hope it should improve. Otherwise, appropriate decisions will be taken during this financial year.
Thank you, Chairman, sir. Now
Thank
I request a moderator to unmute the members in sequence who have registered themselves as a speaker. Speaker member are requested not to repeat the question which are already answered by the chairman. Moderator to unmute to Mr. Anupam Sahni. Hello. Mr. Anupam, your voice is not audible to us. Can we move to the next speaker? Moderator to unmute Mr. Kamraj Senthil. Oh, so Mr. Kamraj Senthil has not joined the meeting. Can we move to the next speaker, Mr. Deep Gandhi?
Good morning, sir. Am I audible?
Yes.
Yes.
Yeah. Thank you for the opportunity and so I've been an active participant in the AGM for last 3 years. This is my 4th AGM. So good to see a new presentation from the CFO. Sir, just one request. So you also used to share the volume data and the industry's revenue share in your older presentation, but you did not share that this time. It will be helpful if you can give that number.
Okay.
So yeah, if you can share that, then I'll move to my next set of questions.
What numbers do you want?
So, sir, you used to share the industry revenue breakup for your maize division and the volume data.
So the starch industry is a 5 million ton industry. Our share is about 25 to 28%. So we stand there in terms of the volumes. We are poised to increase to 6,000 tons grind, and we expect the industry to increase to 6 million tons in the next 2 years. So our share will increase a bit. So we have target to be in the range of 25 to 30% of the industry. As the industry grows, we will keep growing.
Sure, sir. I was actually asking for the industry revenue breakup, but no issues. I'll take it up later.
Yeah. Okay.
So I'll move to my question. So, sir, in the last AGM, we had discussed this that your derivatives revenue always has been at this 30-35%, and you wanted to increase it to 40-45% once your grind capacities are completed. So, sir, if you now that the 6,000 tons per day plan is clear, if you can talk about your next set of capex for this derivatives for next 1 to 2 years, and what are your plans here, if you can talk about that.
So by increasing the grind capacities, we are simultaneously increasing our derivative capacities simultaneously. At Sitarganj, we are commissioning new sorbitol plant. At Himmatnagar, we will be doing dextrose, maltodextrin, sorbitol. So we are continuously upgrading the derivatives as well with the grind capacities. So we will still be in the range of 35%. We although are targeting to be 45 soon, but it could happen a year or there, 1 year here and there. But that is the target, to be 45% of grind capacity.
Sure. Sir, my next question, you did talk about the export opportunity. I wanted to understand this further. So I understand that I think 1 or 2 years back, China has now turned net importer of starch. So was this one of the reason which helped us in scaling up our export revenue significantly? So it has almost doubled in my understanding in 2 years. So do you think this kind of growth is sustainable, and what kind of revenue share do you want to have from exports in next 3 to 5 years? And also, if do you think there is any risk of government imposing any export ban for corn, similar to what they've done in other agro commodities?
I'll answer your last question. We don't expect any corn to be banned. The industry is allowed to import corn duty free as well. So we don't see any major challenge in that. These starch industry is allowed to import corn. On the export front, China is not buying maize starch. China is not exporting that aggressively that it used to be. So that's the reality. So given that situation, we are gaining market share from the Chinese and expanding our footprints around the world, and we continue to expand. We think 40% exports of the total maize division is what we are looking at on a consistent basis. We do not think we will go beyond that, given healthy demand in the domestic market as well.
Moderator to unmute Mr.
Next
Vaibhav
set of,
Barjatia.
sorry,
Hello, am I audible?
Yes.
Yes, good morning, everyone, and thank you very much for giving me this opportunity. Sir, like couple of my questions have already been answered, but just a few more questions as a follow-up. So the company has decided to focus on fermentation-based products, which is currently dominated by China. So fermentation processes is power intensive, which makes China competitive in all fermentation-based products, like mostly used in pharma industry also. So how will we address the issue of cost competitiveness in fermentation products with respect to Chinese competition?
Good question. So, just to share, the power cost in China and power cost in India is very similar. We have 100% captive power, batch process turbines. Our cost of power is anywhere comparable to the Chinese. Someone has to move forward and bring in these products which are 100% import substitutes. So we have taken it up. So we are not worried about the power cost. It is a power hungry industry. We are aware. fermentation business, and we will be able to mitigate the cost by putting world-class plants for the fermentation sector as well.
And sir, like, what is the total R&D expenditure estimated for development of the fermentation products?
It's a mix of both. We will be having R&D and sourcing the technology from other parts of the world. So it's going to be a combination of both. We are going to have an outlay of, as I said, 1,000 in the next 5 years. So some portion will be from the R&D, which is not going to be very significant, but it will be there.
And sir, my last question, sir, what is the total effective import duty on import of starch and other derivatives in India?
So the import duty ranges from 10 to 40% for the products what we manufacture. On starch, it is the highest at 40. Rest is between 10 to 15%.
Okay.
Thank you, sir.
Moderator to unmute Mr. Aditya Khandelwal.
Hello, am I audible?
Yes.
Yes, sir. So you just mentioned in your opening speech that Malda was operating at 50% capacity utilization. But when we look at your Q1 numbers of this year and last year, there was no growth in maize segment. So what was the reason for the same?
Okay, so Malda started the operations. We did 50% capacity. You are looking at the sales part. The prices of corn came down. So overall, the tonnage has increased, which is not being reflected because of the prices of maize coming down and the sales values coming down. But Malda is fully operational. You will start to see the effect of Malda in the next 3 quarters. So there will be a clear impact of Malda and without Malda.
Got it, sir. And sir, just continuing with the exports question. So we have seen a huge jump in the export revenue. So is the export revenue purely dependent on the difference between international maize price and Indian maize price? Or do you think structurally also we will be able to increase our exports?
So maize price is one factor. The other factors are approvals, consistent supply, China plus one. So there are various factors. China not being in the export market so strongly as it used to be pre-pandemic. So it's a bundle of things which help us to export, and customers want to keep Indian supplies, and we are happy to do that on a consistent basis. We will keep increasing our export sales, so we don't intend to taper it down.
Got it. So just one follow-up, because what I used to understand was that international maize prices used to be always cheaper than the Indian maize prices pre-COVID. But after the disruption, because of the increase in international maize prices, we got a sort of a tailwind which helped us in our exports. So do you think if the situation normalizes back to pre-COVID period, there could be a hit on our exports?
So there can be, if there's a substantial difference increase in the Indian maize price and the international maize price does not increase substantially, but now it does not happen like that. We are a free country to export maize also, import maize also. So we don't expect any very big difference in the prices of maize internationally and in India. So we expect steady growth in the export market in the years to come.
Okay. Please unmute Mr. Nikhil Upadhyay.
Hello.
Yeah.
Yeah. Hi. Good morning. Thanks for the opportunity. Just a few questions. One is, in your chairman's speech, annual report, you had mentioned that corn milling in India was unexplored owing to capital intensive and regulatory nature. If you can just speak about on what is on the regulatory nature as a result, it was not explored significantly in India.
So, corn wet milling is a high intensive for water, for raw material. It's a very high intensive water consumption industry. So you have to be ideally located. at the water source. The raw material has to be adequately available at the right places at the right time. So the locations are very important. If you've seen, we have expanded pan India, keeping in mind various aspects. And so I would not say it's impossible for anybody to put up, but there is regulatory approvals, groundwater clearance approvals. So there are challenges in the same.
Okay. Secondly, sir, on the pricing side, if we have to understand the pricing of starch, derivatives and fermentation product, how does the overall pricing changes? Like from maize plus kind of pricing, do we move to a product pricing kind of a regime, or how does the pricing environment change for each of the three categories?
So the maize is the fact is the raw material, but it is not necessary that the finished product always is linked to the maize price. There is a supply demand factor which comes in play. So there is an underline which is always there, the maize price. But all the products, whether starch, derivatives, or the fermentation which will come up, will all have a supply demand factor for the pricing.
Please unmute the next speaker shareholder, Mr. Ankit Gupta. Mr. Ankit, your voice is not audible to us.
Yeah, am I audible?
Yeah.
Yes.
Yeah. Thanks for the opportunity, and one request to the host and Manish is to allow me to ask 3 4 questions, as this is the only time we get to interact with you. So 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 the first question is on the fermentation foray that we are doing. So if you can briefly talk about, like normally fermentation requires a lot of new technology also. So are we partnering with a new any partner, or are we sourcing any technology? Since we're investing 1,000 crores, what kind of asset turns can we generate from this investment? What can be the margin profile and the ROC for the fermentation segment? These plants will be located across our existing maize plants, or we'll have to look at new facilities, or greenfield capex that we'll have to do. So if you can briefly talk about this aspects on the fermentation plant.
So I'm going to answer some of them, not all of them. The what I'm going to answer is these fermentation facilities is being set up through a subsidiary, Maize Sitcam. They are not going to be in a new location. One is being set up in North India, one in South India. So at near our existing starch facilities, because the raw material for the fermentation products are going to be supplied by the starch industry, by our starch plants. So they are going to be adjacent to it, not within the campuses. So that's one question. Margins, we think we should be doing better than what we are doing in the starch industry. That is the reason we are upgrading to fermentation. On the technology part, we have sourced the right technology from various places. I will be not sharing more data on the same at the moment. Let the plants start. You will know more about it in the due course.
Asset turns in this, like what kind of revenue can we generate from this?
So we expect on 1,000 ton capex, about 2,000 crores of revenue.
Sure. Sir, our maize as well as agro processing, as you have been saying, highlighting in all our AGMs earlier, that like raw material procurement is a very, very integral part of our industry beating margins and the scale that we have achieved, especially in the maize segment over the past so many, almost of the past decade. So can you give a sense on how do we make those raw material procurement decisions? Who all are involved in that, or like you are the prime decision maker, or there is an entire team working on that?
Obviously, there's an entire team working on the raw material procurement. We buy raw materials from more than 100 centers in India. We store in our in-house facility. That is the main advantage we have. We don't need to store outside. By that, we save a lot of cost, lot of spillages, lot of theft, and lot of pilferages. So that is the plus point. So the raw material procurement is always the most prime focus for our maize division.
Sure.
Please unmute Mr. Rajat Setia. Mr. Rajat, your voice is not audible.
Hello.
Yeah.
Yes, audible.
Okay. So, firstly, thank you for the management to answer some of my questions already. But I have some more questions which were not answered in the previous session. So, my first question is around the capex that we have done. So, by when do we expect to complete the ongoing expansions of 2000 TPD? And what is the total capex on that? And for this expansion, what will be the peak debt?
So I have already answered this. I will answer it again. We are going to spend 700 crores to reach 6,000 tons of capacity. For the time being, we are not taking any debt. We are going to be debt free. We are going to spend this money from internal accruals. And the timeline I've already mentioned, the Uttarakhand plant 1,000 tons will be commissioned in June 24. The Himmatnagar, which we've just taken up, will be commissioned between third quarter 25.
Okay. My next question is around our own brands. So, what are the gross and EBITDA margins we make in this particular division, and how much branding and marketing do we currently do for the same? And if we consider that we are number one in maize processing, so what is our edge in this part of the business? Because if we see there are competitors, it is a very crowded segment. So can you just explain a little bit more on that?
Yes, it is a crowded segment. There is Chinese competition. I've always been saying, but we are equally competent and have world-class facilities to compete with the China. So we are competitive across all the products we make. And brands, you were talking about agro processing brands.
Yes,
So in
brands
the
that we have. So,
agro processing, we continue to sell now 90% of our oil in our brand. The sector is a low margin business. We expect 5 to 6% margins in the edible oil branded segment going ahead.
and how much branding and marketing do we do for this, sir?
So our branded sales is about 1,000 crores of edible oil.
Moderator to please unmute to Mr. Kaushik Mehta. Mr. Kaushik?
Hello, sir. Congratulations, Gupta ji, for good results. Sir, my first question was on capital allocation. We have generated significant cash flows over last 2 years, and this is in an environment where our margins, at least last year, were not like normal over what they have been. Is it fair to assume that you would only do capex that you have mentioned? At what point would you think about increasing dividend payout to the shareholders, sir?
At the moment, our roadmap is clear for the next 5 years. We are committed to spend 1,700 crores for the maize division and 700 for the expansion of grind capacities and 1,000 crores in the fermentation business. So we are very much committed to spend this, and we think beyond that we may increase the dividend payout ratios.
Thank you, sir. Sir, my second question is regarding is regarding our competitiveness globally. if we look at the maize cost, and this is a global commodity, so maize cost in India is significantly higher because we don't have GM maize in India. Do you see? I mean, and how much cost difference would it make to us compared to our global competitors in that sense?
At the moment, for the last few 2 years, India is competitive. Global price and Indian price, there is not a significant difference. What you may be referring to is the US price, but US and us have no relation. The corn price in China, the corn price in India. India is well poised and quite competitive compared to China. And we don't think the Indian corn price is going to become more expensive than the Chinese corn price. The Chinese corn prices are very much regulated by the regulators, so we will have an edge over them in the years to come.
And sir, my last question is, when you think about payback and IRR on all the projects that you have announced, what is our internal working in terms of like what is the IRR or payback we look at when we do this CapEx?
Yeah, so we normally do 5 years payback when we conceive any project. So that's the target in mind. We could do it in 4, we could end up achieving in 6, but we look at a 5-year payback and do a project.
Thank you so much, sir, and best of luck.
Thank you.
Thank you, Speaker Shareholder, for active participation in this meeting. If any of your question has not been answered during this question answer session, you may please write to us. CS Neeraj Trivedi, practicing company secretary, has been appointed as a scrutinizer for conducting e-voting process in fair and transparent manner for this meeting. The process for e-voting shall continue for next 30 minutes for those members who have not yet cast their votes. The meeting shall stand concluded at the end of 30 minutes. The combined result for remote e-voting and e-voting during the AGM will be placed on the websites of the company and on the website of the CDSL. The result will also be submitted to the stock exchanges as per the relevant provisions of the Companies Act 2013 and the listing regulations. I present a vote of thanks to Chairman Sir and express my gratitude to all the members for their cooperation and announce closure of proceeding of this 32nd annual general meeting of Gujarat Ambuja Export Limited. Thank you. Wishing you all the healthy time ahead.
Thank you.